All right. So Rios Tax and Insurance. Well, you know what we're here for. You guys know what we're talking about.
Yep.
Tax.
What are we talking about?
Taxes and insurance, man.
Yep.
Gotta have it.
And financial
You gotta have it, man. Hey
Financial
guys,
responsibility,
welcome to Double Days Podcast. Thank you for stopping by. Much appreciated. And man, I hope you guys can educate my audience here on what you guys do.
Yeah, definitely.
Because man, I need to learn about some of this taxes and stuff too, man. So I guess if you don't mind introducing yourself, and I guess let's get into it.
Well, my name's Jose Rios. I'm the owner of Rios Tax and Insurance Group, a locally based company straight from here, the south side of San Antonio. I actually grew up 2 blocks away from here on Walton. So, you know, we started this company. I started doing taxes probably back in like 2017. We've grown from 1 to 75 agents in 2 years.
All right.
And you know, we're here, bro. We're here we're gonna help you. We're gonna teach you how to stick your fingers in the IRS's mouth. You know what I mean?
That's what we need. That's what we need right there.
That's what
Diddy
we do.
taxes.
Yeah.
Diddy tax.
No Diddy. For sure.
And my name is Steven Mancha. I'm the director of operations. We have Rios Financial Advisors also. So we also do credit repair on the other side. So I pretty much take both sides and create something out of it. So
All right. So what's your? I know it's tax and insurance, but what do you do one more than the other, or pretty equal? Or
taxes.
We for sure do taxes more than the other. So the reason I had insurance in there is because I'm a licensed insurance agent in 48 states as well. And you know, when I started the company, I was like, well, shoot, I was doing insurance more than taxes at that time. That was my main moneymaker. And eventually, I think I'm going to drop the insurance part. But since the LLC is under that name, I'm like, we'll just keep it. And you'd be surprised, like, since we make a lot of traction and we create a lot of we got a lot of clients. A lot of people hit us up for insurance, so that might be something that, you know, we're gonna tap into. We're just, you know, kind of holding that in our back pocket.
Yeah.
You know?
You're talking about life insurance, homeowners insurance.
Yeah, bro. Life insurance, property
insurance.
and casualty, health insurance, auto insurance, home insurance, renters insurance, landlord insurance.
Construction.
You know, all
Construction insurance?
Wow.
Yeah.
all that commercial insurance.
man, almost everything can be insured now, man.
Yep. We can insure your jokes too, bro.
Yeah, we need to. So if somebody take one, you gotta pay.
You gotta pay me.
That's a policy.
Hey,
That's right.
Yeah,
for sure.
I like that.
Most
We'll
definitely.
be in
That'll
touch.
work, man. So taxes, who loves to do their taxes, man? What's the number one thing that you know, or that you can tell the public, is the one thing that you don't do?
The number one thing that you don't do is don't do your taxes on TurboTax. Don't do your taxes. Don't let your mom and dad do your taxes. Don't do your taxes with Jackson Hewitt. These people, they're kind of like pimps and politicians, right? Take a picture of this, upload it. You're gonna get back $84. Pat. Go about your way. You know.
They're gonna charge you $150.
Yeah,
Get you back
correct.
84.
Correct. And like us, we don't even call ourselves tax preparers. We call ourselves tax strategists, right? So what we do is we look at your file and we collaborate with you on how to strategize to help you have a massive financial breakthrough. You know what I mean? On average, we usually get our clients back $2,000 to $3,000 more on every file than anywhere else. I actually have a slogan that I tell everybody. I go, if I don't get you back more than the other person, I'll buy you a steak. You know what I mean? So that's the number one thing. Don't do your taxes on TurboTax. Cheap and free is not always good, you know. And most people are cheap. You know what I mean? They want the cheap route, but you know, it's like if somebody's giving a free burger away, right?
Yeah,
it's not the best burger. It's a burger with no cheese. You know what I mean?
Yeah, exactly. Yeah. So let me ask you, what's, you know, I guess most people, they do their, what is that, the W-4, where you fill out how many, or is that the W-2? The one where you fill out how many dependents, you know,
the
at work?
W-4, yeah.
Correct. Do you want to elaborate on that?
Yeah, so there's been a couple of years already where a lot of people, the taxes changed, or the form changed. So they didn't know how to fill it out. And they thought they were just filling it out correctly. And at the end of the year, they owed all this money because they didn't have enough deductions taken out. So, I mean, yeah, a lot of people call us and say, hey, can you help me fill out this W-4 whenever they're starting a new job? We're like, yeah, let's do it. That's something that we offer for free because it'll help them at the end.
Yeah. Is there a way to fix that though if someone fills it out incorrectly?
Oh yeah, they can go in and contact HR or their employer and have it fixed. Yeah.
Correct. So like W-4 is like super important, right? A lot of people are excited that they got the job, right? But then when it comes out to their W-4, they shoot themselves in the foot by not filling it out correctly. And I call it the PTP rule, right? The pay to play rule, right? You can't get back what you don't put in, right? In anything in life. So whenever you fill out your W-4, you have the option to go tax exempt, right? Which means that you're going to get back more of your paycheck every week or every 2 weeks because they're taking out less taxes. And then come tax time, and you're like, well, why the heck am I only getting back $2,000 when last year I got back $5,000? I'm like, let me see how much taxes were taken out of your paycheck. Well, when you fill out that W-4, you put that you went tax exempt, or you put that you had 5 dependents and you don't even got 5 dependents, right? Because the IRS legally does not check your W-4. You could put that you have 9, 10 dependents. The IRS doesn't go check that. Actually, the IRS is going to let you do that because they're going to keep more of your money because you're not. They're going to charge you more on your. You're going to owe more to them
at the end of the year.
At the end of the year because you're not having the appropriate amount of taxes taken out. I tell everybody. If you make for every I'm just going to use whole numbers. Say you make 100,000, you want at least 15 to 20% coming out. The reason they call it a federal income tax refund is because they refund you a portion of the taxes that you paid throughout the year. And my goal is to go in there and get you back all of the taxes that you paid at the end of the year. During the year.
So you want to get to zero, meaning I paid 0 federal income tax. That's the goal, right? It's always been the goal.
I mean,
Yeah.
I mean, I don't know if is that doable? Is that
there's situations where somebody would just even out, like they don't know anything, and they're not getting anything back.
Correct.
But at the same time, like you see your friend down the street getting 5-10 grand back, and you're like, hey, why am I not getting that back? But it's just, it just depends on how much you're putting in, like you said.
The question always is, and I think, I know in the community, in our community, right? I would just put what you want to take. You put more to take out more, right? Or you put less. No, you put 0 for them to take out more, right?
You put 0 for them to take out more.
So they'll
Zero
take out.
dependence.
They're going to take out more, right? Mm-hmm. So here's the way I see that. So they're taking out more every pay period, right? And so that money is kind of piling up, over there,
Like a savings account.
like a savings account, right?
Yeah.
But you're not getting anything out of that, right? It's just piling up.
No,
right?
we get you what you put in throughout the year back on your income. So, for example, the highest I've ever got somebody a tax return was $43,000, right? And this guy made over $200,000, right? But he paid about $60,000 in taxes throughout the year on his federal income tax withheld. So when I see that they pay a lot, man, I start drooling. I'm like, man, I'm about to go in on this, man. I'm gonna go in there like swimwear, and I'm gonna try to get you at least 60 to 80% of what you paid into it back. Like if you hear people, man, I got 15,000, 20,000, 30,000 back. It's not people that everybody's under the impression that the poor people or the people that don't make a lot of money get a lot of money back. No, it's the people that make money that get a lot of money back because they're paying more into the FICA, right? So you want to pay more in tax, but I understand in society right now, inflation, everybody's living temporary. Like, man, I need this money.
Right.
I need it now.
That's where I was going to go with that.
Correct.
That's where I was going to go with that.
Yeah.
Exactly.
Yep.
So I'm giving them more, and I'm struggling here through the whole year just so that I can have a nice little paycheck at the end of the year, right?
Correct.
Whether it's $5,000 to $10,000, whatever that is, right? So the question then becomes: so should I do that? Mm-hmm. And I guess it's going to vary per
Scenario.
situation, right?
Every situation.
Scenarios, right?
Correct.
Hey, I'm a new father. I got 2 kids. Man, I kind of really need that money. So maybe I do that, sacrifice that for this year until my kids get bigger or whatever, right? Because I see that, I guess for single people, it's more of, man, why are you putting that money there? Why don't you keep that money? And the money that you would be putting in there, hey, I don't know, go open a Roth IRA,
IRA,
or I don't know, go invest that money because that money's just going to be sitting there all year long, and you could have had it sitting somewhere else where it's
Correct.
actually making money,
Correct.
right?
So when you're single, right? And so when you're single and say, for example, you make $50,000, right?
Oh, you can hit.
And you and say, for example, you pay $5K in taxes throughout the year. Your best scenario is not to owe anything to the IRS. But the way, this is a loophole I'm going to teach you guys, right? So the way you get money back if you're single is what you do is you go get a DBA at the courthouse for $25. You go open up a business. You could say, I'm doing consulting, I'm doing bartending, I'm doing making tacos, tamales, right?
Right.
And what you do with that DBA, you go to your bank and open up a business account. Whenever you get paid from your W-2, you transfer the money into the business account and you spend everything out, because for the first 3 years, you could lose on that new business, and we can expense up to $40K. So instead of you getting taxed at $50,000, now you're only getting taxed at $10,000. So that unlocks more of what you put into the federal income tax withheld.
That's what we want to hear.
You know,
But you have to have that DBA.
You got to have a
Yup,
DBA.
yup.
Now, DBA, LLC, what's the difference?
so a DBA means you're doing business as, right? So that means like, hey, I went to the courthouse and I said I'm going to open up a Rios Tamales, for example, right?
Or
And
Mancha's
then-
Barbecue.
Yeah, or
that I
Mancha's
have.
Barbecue, right? So that does not have an EIN number attached to it, right?
Right.
So say, for example, you mess up and somebody wants to sue you, they can still sue you, right?
As a person.
When you get an LLC, that is registered with the IRS as an actual business. So now you have what is called an EIN, which is an employee identification number, right? And with that EIN, you're more legit to the IRS, so you can actually take bigger and more deductions throughout the year, because the IRS knows, yo, this is an actual legit business. It's not somebody who just did this just because they got up one day and said, shit, I'm just gonna go get a DBA. Excuse my language, but yeah. You know what I mean? And then if you want to go next level, you turn that LLC into an S corp. And that's when you avoid the 15% self-employment tax, and you don't even have to itemize your deductions when you have an S corp. You could say, I spend $80,000 throughout the year, and boom, they don't even ask you any questions at all.
And you get a one-time transferable. You don't have to do payroll every month with S corp.
Nope, you
You
don't.
can just do it one time a year to yourself.
Yep, yep, for sure.
And that DBA is literally what, 23? Is it last? I know I did it 3 years ago.
Yeah, it's
San
like
Antonio's
$23.
like $23, and you got to pay like another
it's not
dollar for the
expensive.
Yep.
For the seal.
yeah,
Yeah.
something like that.
But that DBA allows you to get a bank account with your bank as a business
As a
bank
business
account.
banking.
Yep.
And then you open other banking options too through your actual bank or credit union, whoever you have, to open credit cards and stuff
Okay.
through the bank.
Yep.
So you use that LLC, right? You're using
Or-
the
or-
LLC.
or even the DBA.
It's like a
Oh.
new social.
Yeah, it's like a new
Basically.
social.
You get a second chance at having badass credit without really using your credit, right? Because now everything's going under now you establish credibility through your business. So there's people that have horrible credit, personal credit, and they have badass
Business credit.
business credit.
LLC credit.
Yep. And all they do is look at your bank statements to, like, for example, I feel like 85% of Americans have had bad credit at least once in their life. Once in
yeah.
their life. I'm gonna keep it real.
Hell yeah.
I had bad
Shit.
credit almost all my life, right? Until recently,
I think the
right?
lowest was 525 for me way back in the
You
day.
know? And so with my business, like, for example, I use a merchant called Stripe Capital. Shoot, based on how much money our business made, they gave me a $65,000 like loan. That was at the point one time when I had bad credit, right? Like personal credit, but because the business they saw was generating,
Coming
they're
in.
willing to take that risk on my business because my business is a good risk. I might not be a good risk, but my business is.
And we had to make
Right.
payroll, so
Yeah, for sure. But yeah, bro, like I tell everybody, you don't know, we don't know what we don't know, right?
Man, that was one of my goals when we first started the podcast was I wanted to bring on some people, as like you guys, right? Some tax people, some financial people, right? And the first thing that I get, the pushback that I get is that, well, just tell them to call me because they want to make money. And I get it, man. Everybody's trying to get theirs, right? But I think at some point, we got to get back to the community, right? We got to educate people. I know nowadays with social media, man, it's just a different world
Yep.
versus when I was growing up,
You
right?
don't know who to believe when it's
Right.
And
when it
that's
comes to
another thing,
financial
right? The
advice.
social media
All the
thing, right? You don't know
influencers
who to
and stuff,
believe
yeah.
and how to maneuver around that, right? So, that's why I was like, I appreciate you guys coming on and even if it's just for a short period of time, I'd like to get some of that information out, for our folks, right? And so they can make some better, better decisions, right?
sure.
Right.
Because they're for real. Like I'm in the group chat, right? So I've seen Steven help. I've seen Steven give advice. I've seen Jose motivate like the different group members and everything, and offer little tips. Say, hey, are you doing this with the clients you have? Like just making sure all the steps are covered and everything. So it's like they really they in the community.
Yeah.
Elgin took our tax training academy, and
Yeah.
you know what? I don't charge anything for it, and my average agent probably makes anywhere from $7,000 to $20,000 during tax season. And my high that I get is seeing my agents tell me, you know what, Jose, I was able to take an extra vacation. I was able to pay my rent. I was able to, get my car fixed. You know what I mean? It's not even about me anymore. It's about seeing everybody like succeed. And we give back to the community. We just did a backpack drive with Kylie. Shout out to Kylie. We gave away like about 100 backpacks. We gave away over like 500 backpacks the past like 2-3 weeks. You know what I mean? Because I tell everybody, I don't care how much money your business makes. If you're not in a community, you ain't doing shit.
Yeah.
You know what I mean?
Yeah. I agree. Well, man, let's move over to insurance. Man, insurance.
Especially in San Antonio. 'Cause,
Man.
look,
Woo!
I know.
Talk about, man.
I know auto insurance got to be high in San Antonio.
Man.
Look, I've been here
Yeah.
3 years and been hit twice.
Yeah. Man, San Antonio drivers are aggressive, crazy, and they have road rage.
Yeah.
And they came from California.
Yeah.
Exactly. So you guys do pretty much like a big portfolio of insurance, house, auto.
So we're not selling insurance at the moment, but I know insurance better than I know my mom. You know what I mean? So whatever insurance questions you have, I can definitely.
How about life insurance?
Life insurance.
So you got the term and you got the whole.
Yeah.
So explain it the best you can in layman's term, like what's the difference, right?
Okay.
What's the best?
Term is like you're renting a house, right? So a term policy, it's either 5, 10, or 15 or 20 years, right? Say, for example, you're paying $50 a month and you're paying for 20 years. And at the end of 20 years, you don't die, right? You got to renew your policy at the end of 20 years at an older age.
Yep.
So the older you get, the closer you are to dying, the more your insurance policy is going to be, right?
Right.
So a whole policy is something that, for example, I'm 38.
So let's go back. Let's go back because I had a question on the term, right?
Yeah.
So on the term, once that policy closes after 15 years, let's say it's $50 a month, 15 years, $200,000, right? I'm 29 years old. So in 15 years, that policy closes. That means that money's gone.
That money's gone.
I'm never going to see a penny of it. And then I have to renew. I got to renew up, right? So now I'm older. Obviously, it's going to be a little bit more,
Correct.
right? And however, what I'm gonna insure myself for. And so at that point, the question I guess that I'm getting to is, do I do term? So for people out there, do they do term when they're younger, or do they jump into the whole life when they're younger? You see where I'm going with that?
Correct. Jump into the whole life when you're younger, because you're healthier, right? Because like say for example at 38, right? I get a policy. My policy is $100 a month. I'm locked in at that price forever, and I don't have to renew my policy, right? And say the face value is $200,000, which means when I die, my family, my beneficiary, is going to get $200,000, right? So you never have to renew a whole policy, but I always tell everybody, get a whole policy for the family and get a 30-year term for your mortgage as mortgage protection, and get it as the face value of what your house is worth. So if you die within that 20-year span, right, at least your house is paid off, and then your family gets the whole life policy for them to do whatever they want with it, right?
Okay.
That's a hack. And then there's another one called an IUL, an Index Universal Life Insurance Policy, right? Which is a whole life. It's like if the whole life and the term banged it out and had a baby, basically,
Okay.
right? So the IUL, say for example, you lock it in at 20 years old, you're paying $100 a month. That $100 is accruing interest month over month, year over year. And say 30 years from now, you put in 100 months for 30, 100 bucks for 30 years, you can actually borrow from it, and it just deducts from the face value from the 200,000. So say you borrow 50K from it, now when you die, you get back 150,000.
Right.
But it's accruing interest, and it can never lose money. It only gains money, and it gains based on how the stocks are.
Oh, okay.
So that's an index universal life policy. It's like it's a whole term policy with a savings account built into it.
Now is that going to be? Would you say that's going to be more? Meaning your premium, your monthly?
Oh, for sure.
It's
Oh,
going to be more. You're going to pay more.
Because
Correct.
it's kind of a risk for the insurance company because they're taking what's it called? If you borrow that money, you don't pay it back.
Yeah.
You know what I mean?
It's like a 401k
Right.
with the life insurance policy on it.
You said IUL.
An IUL, an index universal life policy. You see, when you die, you do two things, right? You either leave somebody a bill or you leave them a check.
Yeah.
Who are you gonna be? You know what I mean?
Yeah.
So
I'm gonna leave him a joke.
yeah, I'm leaving with the joke.
Because look, I'm gonna call like, hey, let me get that IUD. They gonna be like, what?
Let me get the
IUL. I'm sorry, slip.
Let me get the UTI. I want the one that burns.
You know, hang real quick, hang up.
But you see, I would say 70% of millionaires is because their parents positioned them with the IUL.
Man, I've
or
been
life
trying to
insurance.
speak that word for a long time, man.
Yep.
Speaking to young people, I tell them that exactly what you're saying,
Yep,
right?
yep.
So they're thinking, generational wealth. They're not just because it's so hard, especially with the way things are today, right? Especially the millennials,
It's so easy
right?
to get money.
It's so hard to get them off from being so
Instant.
selfish. So it's about me. It's about now. It's about
now. Like for them, it's now.
it's about now, right?
Yeah. Yep.
They just don't think down the road. And it's okay to think about now, but they got to understand you're going to get your ass old
Yeah.
and your kids are going to be there, right? And I
Correct.
mean, do I owe them anything? Do I need to be giving my kids anything? Do I need to leave them anything or whatever? That's going to be per,
Yep.
each individual. But I don't know. For me, I would want to leave something. I mean, it's got to be a little something, right?
Correct.
And so people need to be educated in that. Man, why do we have kids in school talking about George Washington and the War of 1812 and all that shit? Why aren't we talking about this stuff, right? Why don't you
Correct.
And taxes.
taxes and
there's some
insurance,
credit.
all
Credit.
this shit?
You know what I
man.
mean? It's like the government will lend you $80,000 as an 18-year-old coming out of high school
To go to
and
school.
to go to school, but they won't lend you money to start a business. What if you're a better entrepreneur than you are a student? I had a friend, and shout out to Anthony Luna. He was going to school at Incarnate Word, and he was taking
Shout
a
out
business.
Incarnate Word.
Yeah, he was taking a business class
Got
there.
my certificate.
And he told the professor, he's like, "How much money do you make a year?" And the professor's like, well, no, he told the professor, how many businesses do you own since you're a business teacher, a business professor? He's like, none. How are you going to teach me about business and you don't own a business? That just means you know the curriculum.
Right.
And then he's like, how much money do you make? He's like, man, I make about $90K a year. He's like, man, I need to go talk. I need to be talking to like people that make $300,000-$400,000. Like you can't teach somebody, you know, like I tell everybody, why sell Chevys when you can sell Lambos?
Yeah.
You know what I mean?
Yeah,
Like,
yeah. Man, that makes sense. Yeah. Why am I listening to you here? Why am I paying you money and you're not even walking the walk, right? I mean, you're not
Correct.
even
Right.
doing that, right?
Yep.
You just read it off some book that you graduated from at some college, right?
Correct.
But you've never lived it.
Correct.
That's
Yeah.
That's the whole market of college.
Yep.
We want your money.
Because it's a business too.
Yes,
It is a
and they
business,
gotta
man.
run
I
it
think
like
it's a
business.
scam, dude. I'll tell you my story after the podcast because it can't be broadcast.
You know,
But
it
it's a
is.
scam.
It is. You know what? And he says that all the time. It's like, he goes, Bobby, college is a scam. I'm like, look, if you're gonna be a doctor or a lawyer, I understand
get
that.
it.
You know, but for the most part, like it's they don't teach you what you need to know in real life, right?
To survive and make
Yeah.
it.
And so now they opened up like the certificates and the boot camps.
Yeah.
You know what I mean? And it's like they bring in the boot camps, but they're still charging, 10, 15,000 for those. But then at the end of the day, you're like, what if I don't have a job? What if, I mean, yeah, you can do it in 8 weeks, but what if I don't have a job?
Yeah, that's true. That's
Yep.
true.
So I mean, so why is it? I guess we need to explain to the young people why it's so important to set yourself up for the future. Because you got kids out here spending $20,000 on jeans,
Yeah.
living in an apartment.
Yeah.
Like, it's
I've
the
always said,
craziest thing.
I've always said with the Louis Vuitton thing, you know, with the purses and all that, I'm thinking to myself, what would you think the percentage of women that are out there that have a 2,000 plus Louis Vuitton and don't even have $2,000 in their bank
In the
account?
bank.
Yeah.
It's
I would
high.
say I bet you it's at least
90.
60.
90. No, look,
I was gonna be nice, man. I was gonna say
nah,
60%.
These scallywags nowadays.
I would say about 60%, man. They're
Chicken
carrying,
heads.
yeah, they got a Louis Vuitton,
Broke.
you know, and they don't even got $5 in the bank, man.
Yeah.
And they probably don't even got $2 in their purse.
They haven't even got an oil change on their Mazda 3. You know what I mean?
But see, they want us to have it. So it is important to teach young men to be financially responsible because you're gonna have a family one day,
Right.
Correct.
and things happen.
Correct.
So you need to learn how to bounce back financially when it happens.
Correct.
So let's switch over to auto insurance now.
Let's do it.
Man, auto insurance. God, dog, man. I hate that, man. Every month, man. I go, shit, they did take it out. Every month,
And
man,
you-
they take
and you
it
have
out,
to
right?
have it.
So, okay, so let's talk about that. So, vehicle. Let's say I got a brand new vehicle back in 2018. It's paid off now. The first thing people say is, why are you paying so much insurance? Don't do the full coverage. Drop down to, what is that? The
Liability.
Yeah, it's like 1/3 of the cost, right?
Correct.
So walk us through that and what's the thinking there?
So look, check this out. Like if you're financing the car, you need to have full coverage,
Correct.
right? If you own the car, you could have liability, right? But it all depends on what it means to you, and it all depends. Like if something happens to the car, can you afford to get another car, right? So the biggest thing about insurance, right? They look at risk factors, right? So they look at how many claims you made, and I don't know if you guys know this, but roadside is a scam. Every time you call roadside, they count it as a claim.
As a claim.
Yes.
Right?
Oh,
Okay. So, and then they look at how many policies you finish out consecutively without having a lapse in coverage, right?
Because
It's
there's
6
insurance
months, right?
credit.
Correct. You have an insurance credit score. So the more policies that you finished out with least accidents, the better your rates are going to be. But if you're a person that jumps from company to company to company and you go a week or 2 weeks or 3 weeks or a month without insurance, your premium is going to be high because the company's like, well, shit, I don't know if Joe's going to stay with us for 1 week, 1 day, or 1 month. Because you're jumping from place to place to place, from company to company to company. So the best way to set yourself up is start a policy, finish off the policy, and then before your policy is going to renew, get quotes and switch during the policy, and say your due date is in 2 days from now, switch before the next payment comes out. So they refund you back a couple of days, and then you start brand new, right? And if you could throw in a renter's insurance, a lot of people are like, well, I don't need
Jewelry
renter's
insurance?
insurance. I'm like, well, I don't need the fries with my burger either, right? But if you throw in the renter's insurance, you basically get a 20 to 30% discount on the auto, so you get the burger, the fries, and the drink for the price of the burger, basically. You know what I mean?
Okay.
So,
So what about let's say you're in an auto accident.
correct.
You don't have a car for a couple months. You don't need the policy. I've heard they have non-auto insurance.
A name not owner's policy.
Name not owners. Yeah.
That way you can keep that policy credit in good standing.
Correct. Or you could loophole this, right? You can have your mom just add you onto her policy. Or you can say you don't have insurance, right? Of course, your first policy is going to be expensive. What you do is you add your mom on there who's been with State Farm for 20 years, and you get her insurance history on there. And that's the loophole right there. That's going to cost $9.99, guys. You know,
Come on, they can do that.
I just learned this on YouTube yesterday, I promise. You know,
That's crazy.
yeah, bro. I was the #1 insurance agent for Nationwide. I sold over like $700,000 in premium. Like, I would tell people literally, like, it's 5 o'clock in the afternoon. Why are you calling about insurance? Why are you not taking a shot of tequila or having a whiskey? Oh, you know what? I had 3 accidents. My company's about to drop me. Now I found out the why behind the why.
Yeah.
You know what I mean?
Yeah.
So,
yeah.
So like, yeah, but yes, that's an insurance loophole as well.
Is there a number? And I know people don't even look at this, man, but I do. Shit. Is there a number? Let's go back to my scenario, right? So I just paid the car off, right? But it's still in good condition, right? I mean, it's only got 70,000 miles. I've had it for 10 years. You know, I put it in the garage. It's taken care of, whatever. But it's been paid off.
Yep.
So, at what point do I stop the full coverage
Do you,
and just
do you
go
use
to?
the car?
Yeah, let's say it's a daily drive.
your
You know, it
daily
takes me to
driver,
work
okay.
and back.
Okay.
It's a daily driver,
Because
right?
in some cases there's storage insurance where you can just store it.
I guess what I'm.
But
sa-
if you're,
I guess
if
what
you're
I'm
using it,
Yeah, I guess what I'm getting at is like, okay, so let's say the car again, you know, it's already 7 years old, 70,000 miles, but in great condition, right? And then I look and go to Kelly, right? Oh, it's worth. Let's just say, it's worth in this condition $20,000 still, right? Do I still carry my full coverage because I know that my car is worth $20,000? Because if somebody wrecks me, or if somebody hits me and totals my car, or if I wreck and I total my car, if I don't have full coverage, I'm screwed, right?
What does it mean to you?
Well, I want the 20,000, dude.
No, like what does the car mean to you? You know what I mean? If it means a lot to you,
Well, it means a lot to me in the sense that if I don't have a vehicle, then I can't go to work.
Correct.
And where am I going to get that money to go buy me another car?
And if you break it down to the ridiculous, right? And you look at things on a daily basis, right? Say your policy's $175, right? We divide that by 30 days. It's only costing you $6 a day. Stop buying that cup of coffee. You know,
No coffee?
no coffee, no Dunkin' Donut coffee. No, I'm just playing. But
I don't know,
or you can do it like this, right? You could drop collision, and you could keep comprehensive. Comprehensive's everything out of your control.
Ah,
Wait,
okay.
you said keep comprehensive.
Yeah,
That's
because
pretty much stolen.
That's acts of nature, hit and
damage.
run, hail damage. If somebody, like, you know, theft, vandalism, acts of nature, right? If you know you're a good driver, collision means like football, you collided into somebody. So if you're a good driver, you know, you're going to take that risk on yourself, right?
Yeah.
But
Yeah.
comprehensive is everything. And we live in, you know, I'm from the South Side. So, you know, if I had,
They
if
bring
I
us
owned
to
a
our
car,
car.
I
Say
put
it.
comp on that. You know, I grew up 2 blocks from here on Walton. You know what I mean?
Say it.
You know, so at least keep comprehensive out there because we can control what we can, but we can't control what happens that is out of our control.
But why is it that when let's go back to that scenario? So let's say my car is worth 20 grand, right? And you know somebody sideswipes me, man, boom, totals the car out now, and then the adjuster comes and says, okay, well, you know, here's your $12,000 check, and I'm be like, wait a minute, hey, the car was freaking pristine, man, 70,000 miles, car, you know, stored in the garage every day, and you only give me 12. But you know, a month ago I looked on Kelly, and in a good shape, it's worth 20.
Correct.
So why?
It's because the adjusters are cheap and they're trying to save the insurance company money,
Yeah.
right? But look, there's a feature that you can add to your policy called brand new car replacement, or if it's totaled out, they'll replace it with the value of a brand new car with 5,000 miles lower. So find an insurance company that offers brand new car replacement to avoid that happening.
Brand new car
That's another
replacement.
gem.
Add it on, dude.
That's a good one, right?
I gotta look at that one now.
Yeah.
and it can only be like $5-10 a month.
Yeah, it's
Yeah,
called
man,
new
because
car
I guess
replacement.
I got a couple of good vehicles, man. They're paid for, but they're taken care of
Yeah.
and all that stuff, right? I do the maintenance and the whole nine, right? And I'm like, I know that what it's worth, but I know, you know, insurance company. Well, you know, here, David, here's your $8,000. I'll be like, what? Freaking car was at $30,000.
You can
man.
also fight it. I mean, you can also fight it with the adjuster, but I mean, they'll probably give you a couple of grand.
And you know
more.
what
It's not gonna
sucks
be.
is we don't even sell auto insurance right now. We don't. It sucks. And you know why? Because people are shopping for the lowest rate, and nobody's giving low rates right now because the risk ratios are super, super high. Like
Especially in San Antonio.
Yeah.
Especially with all those hail damages. Like just today, there was hail.
Yeah.
On medical center. So it's like, you know,
It's crazy.
Yep.
But like I know if you have a Kia, Hyundai, or any truck in San Antonio, you better have full coverage.
Correct.
Yeah.
And you know, to get a better rate, skip the agent. Go online with like Geico, Progressive, State Farm. Skip the agent because the insurance company has to pay the agent a commission. But if you buy directly online, you skip the commission that's getting paid to the agent, and you're just buying it directly from the company as well.
it's like a third party.
Yep.
So don't go to the agent. Go directly.
Well, some people are.
So what if they're agent to, let's say, you know, Allstate? You see, it's Allstate when I pull up to the store or to the.
Whatever the agent could do for you, customer service with Allstate could do for you.
Okay.
The agent, some people are just like they have that old school mentality. I want to see the person, shake the person's
Yes.
hand, smell the potpourri in the
Right.
office. You know
exactly.
what I mean?
Yeah, the free spearmint.
Yeah.
wanna see the
I want
bullshit.
the free bottle of water. You know what I mean?
Exactly.
But
I
you
know
don't
it's
need
bullshit.
that.
I just wanna see it.
Yeah, you could just call for. You don't even have to call your agent. Like some people are like, let me call my agent and see how much my bill is, bro. You could just call Allstate's customer service and find out how much your bill is. Or you can you can have Allstate's customer service remove a car. You don't need an agent anymore.
Yeah, but then you got to talk to Motep and then over in India.
To Roger.
Yeah.
Nah, man,
My
I got
name is
Tanika,
Roger.
dude. Tanika's on speed dial. Tanika, shout out. That's my girl, man. That's my insurance girl, man. I just go like any insurance question, man. I just boom, 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 and she's got the answer.
Yep.
She takes care of me, man. Tanika. Anyways, but okay.
We got a credit repair. There, you guys do credit repair, credit work,
Credit repair.
Yeah, what's going on with the credit repair? Let's move on to that.
and why is credit important?
Credit is super important because that's what's going to unlock like your financial freedom, right? There's people that make $40,000 a year and have perfect credit and live a better life than somebody who makes $100,000 a year with bad credit, right? Having good credit brings you really a stress-free life because say you fall into a jam, right? My car broke down, right? And you have good credit. At least you know you have credit. You could go apply for credit somewhere and get your car fixed, right?
Yeah.
And most of the time, it sucks to be told no. I got told no like 90% of my life, right? The moment I got good credit, I live a peace of mind life because I know that if, hey, I need to move out of this house, I apply somewhere, I'm gonna get approved.
Right?
Right. Hey, I know if I need to take an emergency trip somewhere, I have a credit card that I could buy a flight for. Hey, you know what? I got married, and I don't want this person to think that, man, I'm not financially stable. And we want to move in together, and I get denied on the application because of my credit.
man.
You know what I mean?
Yeah, blame it on the ring. Blame it on the ring.
Yeah. So having credit is super important. And the thing about credit, man, you can mess it up and you can bring it back. You can
Yeah.
mess it up and you can bring it back. So we offer a lifetime service through our company where you pay $750 and we fix your credit as many times as it has to be fixed, regardless of how many times you mess it up, which is pretty amazing because most credit repair companies charge you every time you mess it up. So you pay it once, it's like having a lawyer on a retainer. We're going to help you out for life, but having
Cool, man. That's that.
Yeah.
That's a good. That's big.
that's huge.
That's freaking huge, man.
Yep.
Like, in credit, dude.
Pause.
You got,
And it's
you got
because
good credit or what? Shit,
it's because it
man.
happens
You
to
gotta have
people
credit,
like
dude.
life
I know,
happens.
but yeah, but it's the way you said it. Like,
Shit,
then you looked
it's
at me.
huge, man.
It's like, no, pause. Like,
Fuck yeah, man. It's
Sign
man.
me
That's a
up.
big deal. That's a really, really, really big deal, man. Yeah, I harp on that a lot, family and stuff. But yeah, credit. You gotta have credit, man.
And the credit number, so is it 850 now or still at 800?
It's 850.
850 is the highest, right? And it's crazy because it's 200 points from good credit to bad credit.
Correct.
But then even under bad credit, you can drop another 300 points and you're still in the same range.
still in the
You
bad
don't
credit.
want to, but it's the weirdest
But there's
way how they rate
there's
it.
28 different credit scores. So yeah. So
There's
like,
what now?
28
damn.
different credit scores.
Okay.
Yeah. So
Explain that.
there's a credit score for auto insurance. There's a credit score for to purchase an auto loan, to get an auto loan. There's a credit score for home. There's a like to get a mortgage. There's a credit score for 28 different things. And so if you ever go to like through Credit Karma,
Yeah.
it's going to tell you, you're at a 650, whatever you're at. But at the end of the day, I mean, it's giving you their average.
Yeah, that's not a true number.
It's not a true number.
pertains
Yeah,
to
the
the
Credit Karma,
situation.
man. That's not a real deal, man. Because I bought mortgages right before.
Yeah.
The first couple that I bought, no, that wouldn't even. It wasn't even close.
wasn't even close, yeah.
It's not even close.
It's actually higher than what it is on Credit Karma sometimes.
Right.
Because they're doing a real time credit. When you apply for like a house or a car, they're doing a real time credit score at that moment. So you could pay all this stuff off and you look at Credit Karma, it could be a 530, but they're like, Joe, your credit's a 650.
Yeah.
Like, you're like, what? Well, Credit Karma said this. Or it could work the other way around. Credit Karma could say you have a 650 and they're like, Joe, you got a 400. You know what I mean?
Yeah,
or
yeah.
500 credit score.
Yeah, on this second one, this or third one that I got, it was I looked there and I go, okay, well, I'll pull it. Pull the report. I said, okay, well, I'm ready. I call the guy up, the broker. Hey, we're gonna go ahead and pull the trigger on the house. Okay, boom, boom, boom. Like a week later, when I went up there to sign the papers, he showed. I said, hey man, so what was my credit? And he tells me this credit. I said, man, dude, that's like 100 points less than what I just pulled it at on Credit Karma. He goes, man, dude, that shit right there is, it's delay or it's old or it's gathering other information. He goes, David, when we pull it, we got to go directly through, I guess, TransUnion, Expedia, or Experian or the other one, right? And so he says, so that's good to at least kind of give you the ballpark.
Right.
So if you are going to go buy a car, hey, I'm at a 700 or I'm at a 680. Okay, hey, I'm good, right?
Yeah.
But he goes, you need to pull directly from those.
And you get a free credit report every year through all those 3 bureaus. So I tell everybody, pull it, right? And it's not hard to get good credit. It's just taking care of the things. It literally tells you what you got to take care of. And then it tells you the things that you can't take care of, but you need to send in deletion letters for because it's still on there. And our system actually tells you, like we send you an analysis. We're like, hey, Joe, these are the credit cards that you have out right now. If you just call these companies and if you just pay this credit card down to this, it'll go up this much. Hey, Joe, these are the letters that we're going to send out for the closed accounts to delete these off your records. Once we delete these, it's going to go away, right? Now, there's another hack to credit to get it higher, right? And it's called trade lines. So basically, like the auto insurance thing that I was telling you, tell your mom, add your mom onto your policy, you get her credit. So if you're really looking for instant like scores to go up, you could find a friend, a family member to say, hey, add me to your $30,000 credit card. Don't give me the credit card. But by you being added to that person's trade line, you get their
payment history.
You get their payment history, right? And then you get the credit history, how long they've had that credit card, and that usually boosts your score up 50 to 80 points right away.
And the balance too, because once you have that available credit, it's showing up that you have that available credit on your end, so it boosts up that number too.
And it's also a good way for parents who do have good credit. They can put their kids on their credit cards to start them in life with good credit.
I'm going to do that for my kids when they're 18, but I'm not going to tell them I did it. Yeah. But because that's going to give them a better chance at being financially set in life. You know what I mean?
Yeah, that's so important, man.
That's so important, bro. Like people don't understand how important having good credit makes life easier in the toughest times.
It sure does.
Sure does.
Yeah. It was nice this weekend, man. Man.
And I tell everybody, keep your credit cards at, less than 10% utilization.
Yeah.
If you use it, whatever you use that month, pay it back off. But,
or treat it as a 28-day loan.
Yeah.
You know what I mean? Like treat it as a 28-day loan where within 28
days. That's why I like cards like American Express where you just have to pay it off, right?
Oh, yeah.
Pay it off and get it out of the way. Because it wasn't meant to be. It wasn't meant to just sit there, right? It's meant for you to, hey, I needed $1,000 because I needed to go up to, Houston because of an emergency, right? And I need a flight. It wasn't meant to. Okay, it's like you owe everybody around town and they all want their money plus.
Yeah,
right.
Yep.
And that's
I've been there before.
That sucks, man.
I'm still there. I got a couple people. I won't say no names.
We got your money, man. We got your money.
So if anybody out there is looking and watching, where can they access you guys or hit you guys up for any one of these services?
So on Facebook, you could go to Reels Tax and Insurance Services. You can follow us on Facebook. We got Reels Financial Advisors on Facebook. We got Reels Tax and Insurance on Instagram. You can follow me, J Reels Insurance 23 on Instagram. We got our website, Reels Tax and Insurance, ReelsTaxandInsuranceServices.com. Of course, people don't really go to websites anymore. That's like, that's like using an AOL disk for some free hours, right? But or you could just give me a call, 210-779-6363. I don't owe anybody money, so I answer all my phone calls. You know what I mean? So,
I hear you, man. All of them except for the spam.
yeah.
You, Mr. Mancha.
And the same with me. I run the Reels Financial side, financial advisors. But yeah, my number is 210-563-9386. And on Instagram, I don't even know what my handle is. No, it's smancha88. Yeah.
That's Mancha. Hey, he's a good pit master. This guy does catering. He does briskets. He does. He is one of the best. He smokes one of the best briskets I've ever tasted.
Really?
Briskets I've ever tasted.
Oh man.
It's really, I had it once or twice.
Once or twice, yeah.
Yeah, I was like, Steven, boy, you ain't telling me you cooking like
Yeah,
this, boy.
cook, boy. He's like a cook. Yep.
You know what y'all should do? Y'all should start like a tax OnlyFans page and just have like different tax returns, but just have your fingers going across the page.
That'd be cool.